We've given a further submission to the authorities down in the Western Cape. And really the only formal interaction has been that. They proposed a 2% increase in gaming taxes down there, which we've accepted on the basis that it's in lieu of exclusivity for the time being. And we wait to hear. We continue to do our own homework, obviously, and really our conclusions are that we don't see room for another significant large casino that is focused on Cape Town.
But that's strange, Graham, because you're making a 42% profit margin there. Second best in the group is a small operation, Meropa, 38. You have to get down to 34, so a long way lower before you start getting to a big operation of yours that's anywhere near that kind of profit margin. So surely it doesn't look as though it can be sustained indefinitely.
Well, I think what it's telling you is that we're doing a very good job down there. So the point I'm making is I'm not sure that we're missing anything down in the Cape. And if the intention of government is to increase gaming revenue in totality, I'm just not sure how much they can increase it given the job we're doing already.
How high or how confident are you that you're going to retain this exclusivity in the long term?
Well, we're doing obviously everything we can. It's a very important exercise for us. And as I say, logically and commercially, when we look at the database that we have, if the intention is to increase overall gaming revenue, then I don't think it's not something that's going to double to justify the size of a second large casino. So on that basis, we'd be confident. There are obviously a lot of other forces at play down there, and we'll just have to wait to see how that process pans out.
One of the other forces is your BEE partner, GPI, Grand Parade Investments, now looking to acquire a competitor of yours, Piermont. How does that go into the mix?
Well, we'll wait to see what happens there. I mean, our understanding, and we're reasonably close to them, is they are looking to secure what will initially at least be a minority stake. I think once the deal's done and we've got some clarity, we'll know how to react to it.
But certainly to have a competitor in your board or as a significant shareholder in your biggest operation cannot be too comfortable.
Well, let's wait to see what happens with the deal. And then, as I say, we'll know how to react once we have some clarity on it. It's probably untenable that he'd be on both boards, but until there's a deal that's actually done, it's difficult to try and predict how we would react.
And your other big investment in Chile, it was interesting to see that there was a smoking ban there that affected your numbers. How so?
Well, there's a strong correlation between smoking and gambling worldwide. And in our interims, we warned and cautioned the public here that we could see a drop-off coming. And it's not untypical of the reaction you've seen in other countries that have gone before. Australia and New Zealand had a similar drop-off in revenue. And hopefully we follow their trend, which is that in 18 months you're back to where you were before as the smoking public adapts. And as we also react in the form of smoking terraces and that sort of thing, which we have constructed and which are due to open in about a week from now, actually.
That would suggest that smokers are more or have a greater propensity to gamble than non-smokers.
Well, the two do seem to go hand in hand. You know, people that smoke generally like to gamble and vice versa, I guess. If you look at the most productive areas on any casino floor globally, it's in the smoking areas.
Looking ahead to the next financial year, this one, the numbers are good, the market's rewarded you, the dividend is up. Well, perhaps we can just dwell very briefly on that. You say that despite subdued trading in the second half and your expansion projects, as a result of that, your dividend is 155 cents, your final is against 150. If I'd heard that comment in isolation, I would have thought you lining us up to cut your dividend, but it clearly isn't that bad.
No, it's not that bad. We had a long debate about it, and we can afford the dividend. It's not going to change our plans in any way, so we decided to go ahead with a slightly increased dividend.
And the coming year?
In the coming year, we'll just have to see what happens in the expansionary pipeline. But again, I don't think the level of the dividend is going to be a swing factor in that.
But trading overall, clearly you've got the Grand West story on the one side with the exclusivity, which will have an impact on your business one way or the other. What's the rest of Sun International looking like?
Well, it's the Grand West exclusivity, whichever way it goes, is still some way off. I mean, they'd have to make a decision, then there'd have to be a bidding process, and I think it's fair to say we would also participate if there was that compelling an opportunity. You know, we have another license in the Western Cape, and once you're through with the whole process, it's still probably a 3 to 4 year build. So the impact of Grand West exclusivity is still some way off. Outside of that, as I say, we've got some subdued growth, but nothing that's really going to curtail the type of dividend and the quantum that we have in mind.
So we heard from Sun, one of your competitors, that things were looking fairly buoyant from their perspective. reading through your numbers, you don't seem to share that view.
Well, I think we pretty much in line with them, to be honest. If you look at our gaming results versus theirs, very, very much in line. Maybe where they have some advantage is they have a greater presence in the hospitality side. They have more hotels than us. And I think it's in the hotel sector that you're seeing a growth year on year.